Hey, what's up, guys? Good evening. Welcome back. Long time no see, right? It's been like 3 weeks since last time I streamed for you. And sorry for being late, but I was watching the game I was watching the semifinal of the Olympic basketball, and wow, it was a very exciting game. At some point I thought that Serbia was going to get away with it, but no. Thank you, Mr. James. Thanks, guys, for being over there. We have a lot to talk about. Please drop a comment down below and let me know what stocks you guys want me to go over. We've been very active on Discord. Is every one of you aware of my Discord channel on the server? Yeah, Josh. Hello, Josh. M1 Chat. Latoya Williams. Welcome. What's up, folks? Mason the Mason. Rick the King. Let Me Think Podcast. Flying Drone. Welcome, guys. Aiken. Mahesh. James Taylor. Scoop 8323 Mini. All right, I guess that you guys have a lot of questions, right? We've been killing it on the SPY. It's been a very exciting week, to say the least. You guys know that volatility is the best friend of any trader, and we have been making the most of it, right? Bumble 5264. Chris. All right, guys. So in the meantime, and while you guys let me know what stocks you want me to go over during the stream, let's make a summary of what is going on as of now. Russell 2000 went up today 2.42%. We had a very positive day, green day, I would say, across the board. The Nasdaq went up 2.87%. The Dow went up 683 points. Jesus. Up 1.76%, and the S&P 500 went up today 2.30%. If we take a look at the 11 sectors that trade inside the S&P 500, all of them closed today in positive territory, led by technology. Apple, Nvda, Google, Amazon. You guys know the drill. So technology went up today 3.73%. Industrials up 2.31%. Healthcare up 2.21%, and the worst performing sector today, I am going to, quote unquote, worst performing sector today was utilities, which also went up, but only 0.11%. If we take a look at the SPY, guys, you guys know that this is my specialty. So the SPY went up today 2.31%, and it closed the trading session at $530.65. We have been talking a lot recently about this blue line that I am pointing out with my mouse. What is this blue line, guys? A very important spot. I have been pointing out this blue line, this moving average, over and over and over and over again on Discord. This is none other than the infamous 100-day moving average. If I pull up here, guys, a 5-day, 5-minute chart, take a look at this, guys. So the bulls failed right at this 5-day moving average last Tuesday. They failed right at this level at around $529.50 in yesterday's trading session, and today they were able to burst above the 100-day moving average. They broke it to the downside, but a bit before the end of the trading session, they were able to close the trading session above the 100 DMA, 100-day moving average. So this was a very solid session for the bulls. Needless to say, they also recaptured the 5 DMA, 5-day moving average, which is a moving average that I use in order to determine who is in control of minor time frames. So this was a very solid day for the bulls, guys. However, if I pull up here a 4-hour chart, take a look at this trend line, guys. This red trend line that I am pointing out with my mouse. I have told you before, on multiple occasions actually, about this trend line. Take a look at this weekly chart of the SPY. Take a look at this trend line, guys. This is a trend line that comes from the 2008 crash. It crosses over the 2022 top and last April's transitory top. Let's just put it that way. Take a look at this trend line that comes from a long time ago. If I pull up once again a 4-hour chart, say that tomorrow the bulls keep going higher. I think that at around $534-ish, we should see a good old bear bull battle over here. This is an important spot, and the markets know this is an important spot from a technical standpoint. So the bulls still have a lot of work to do over here. No doubt about it. They have made some acceptable progress because, as I just said, they were able to recapture the 5-day and the 100-day moving average. But for the bulls, in order to be in total control of the tape once again, they need to do 3 things. First, they need to take out, they need to burst above the trend line that I just told you guys about that comes from 2008. And they also need to recapture and consolidate above the 50 and the 20-day moving average at around $544. If they happen to be able to do this, to pull this off, this is going to imply that the 5-day moving average is going to be upward sloping. So if I see the SPY, guys, trading above $544 with the 5-day moving average upward sloping, this is super positive. This would imply that the bulls are once again in total control of the SPY. We'll see what happens. So the bulls still have a lot of work to do over here, but we can say that so far so good. So the most important area to the upside that I am going to be keeping an eye on tomorrow is going to be 534. Let's say $534.10 or something like that. But very good job for the bulls, really. In today's trading session, they were able to pull off a very positive session that is pointing, let's say that is pointing in the right direction. Let's just put it that way. Okay, and you didn't need to worry about the SPY, guys. If you take a look at my Discord channel, you know that I am, when there's volatility, I am super active, calling out areas of interest that you guys can take advantage of in order to trade the tape. So you don't need to worry a lot about the SPY tomorrow, okay? So what requests do I have over here? Let's see. What stocks you want me to go over, guys? Wow, we have a lot of people today on the stream. Nvda, sure, let's go over Nvda. Nvda. Okay, Nvda is going to be posting earnings in late August, I think. We should be like 20 or 21 days, or the upcoming earnings report of Nvidia should be like 20 or 21 days out, I think, guys. We'll see if this time around we happen to see some sort of front running of the upcoming report of Nvidia. So very positive day for Nvidia as well. It goes up 6% and it closed the trading session at $104.97. But the bulls still have a lot of work to do here as well. Take a look at the spot that they were able to recapture today, guys. And as I just pointed out in the case of the SPY, take a look. The bulls were able to burst above today and apparently after hours consolidate above the 5 and the 100-day moving average. This is bullish behavior, but we still have a lot of technical damage over here. Take a look, guys. So lower highs and lower lows, but we can make some sort of short-term bullish case here if Nvidia can consolidate above the 100-day moving average. So the 100 DMA comes in at $105 as of now. So say that Nvidia opens the trading session tomorrow above $105. If the bulls can consolidate above that level, that could open the door for a potential test of a previous level of support near 100. We can round it up this number, $112. $112 is a previous support back from July 26th and also July 25th. Let me zoom out here a bit. Yeah, this could be the next gap to the upside. And if I pull up here some anchor VWAPs, guys, take a look. We have a new issue, guys, with most of the semiconductor stocks as of now. Do you guys know what that issue is? Overhead supply. So when Nvidia started to go up like crazy, and Supermicrocomputer, and AMD, and I don't know, you name it, guys. You know, any of these semiconductor stocks that went to the moon. When they started to go up, we didn't have any buyers trapped at levels above the price that those stocks were trading at, say 2 or 3 months ago. But check this out, guys. If we take a look at some anchor VWAPs of Nvidia, take a look at this. Let me show you. If we take a look at an anchor VWAP, an anchor volume weighted average price line that comes from the all-time highs of Nvidia, guys, we get a price of $117. So these people are losing money as of now here. They have an average price of $118. So they started positions on Nvidia when Nvidia hit $140 because they thought that Nvidia was going to go up forever. And obviously that wasn't the case. And as of now, they are holding the bag and they have an average price of $118. So more likely than not, guys, if Nvidia keeps going higher, those buyers that are trapped at $118 approximately are very likely to close their positions as soon as Nvidia reaches, if that ever happens again, I think that is very likely to happen. If Nvidia hits $118, those market participants are very likely to close those positions breaking even. That's what we call overhead supply. This is a new issue that these semiconductor stocks are going to be dealing with in the short term. That doesn't imply that Nvidia isn't going to be able to, go back to all-time highs. I'm not saying that, but this is a new issue that you guys need to take into account when it comes to most of these semiconductor stocks. Let me see if I have any other important level that is worth pointing out here, guys. So take a look here, guys. So if we display an anchor VWAP, an anchor volume weighted average price line from the last earnings report of Nvidia, we get an average price of $115. That's another level. This is going to be a tough level in order to go through on its way back up for Nvidia, guys. Somewhere between $115 and $118 approximately. We have buyers trapped all over the place. So I think that may be a potential process of recovery of Nvidia that could, potentially take Nvidia back to all-time highs. It's going to be a tough one, guys. We have a lot of buyers trapped all over the place over here. That is something to keep in mind. If we take a look at the market structure of Nvidia, so let's see what the supply and the demand of Nvidia is looking like as of now. Let's see. This is a tool that I usually use, guys. This is a market structure chart. So what do I want to spot? What am I looking for when I pull up a market structure chart? I want to see imbalances between the demand and the supply. Take a look in the case of Nvidia, guys. The demand is on the top of the chart and the supply is at the bottom of the chart. So demand buyers, supply sellers. Take a look at the demand, guys. There are no buyers. The demand is shown through this blue shaded region that I am pointing out with my mouse. Take a look. There is no demand. Buyers are nowhere to be found over here as of now. This could change, obviously, right? And the supply, take a look, the supply, okay, at the bottom of the chart, the supply is starting to go down, which is positive. This could be potentially suggesting, let's just put it that way, that we could be seeing over here some sort of seller's exhaustion. That could be the case. If that is the case, then I think that we have a trade to the upside here on Nvidia. If the bulls of Nvidia can hold the 100-day moving average as support. Say that we see some sort of consolidation above $105. As I just said, guys, this could open the door for a test of $112 approximately. But we have some technical damage in the case of Nvidia as well. So I would say that Nvidia is still guilty until proven innocent. And we'll see what happens, guys, because to be honest with you, we have seen process of front running ahead of the two most recent earnings reports of Nvidia. So take a look. The last earnings report of Nvidia was posted on May 22nd. And from May 1st up to May 22nd, we saw Nvidia rising 12%. This was a very clear process of front running ahead of the report. And if we take a look at the second to last earnings report of Nvidia, the same story, guys. So, okay, that report came out. Let me see. So the second to last report came out when? This was on February 21st. And take a look, guys. From February 6th until February 21st, we saw a front running of 15%. We'll see what happens. We'll see what happens this time around, guys, because I mean, we can make some case here that the AI narrative has been losing momentum, but I don't know. I mean, I think that report of Nvidia, when is it coming out, guys? Let me see. Nvidia. So that earnings report comes out when? I think that it is August something. Let me see. August 28th. So we are what? Yeah, 20 days away from the report of Nvidia. What do you think? Are we going to see a front running of the report? So Amazon, let's go over amazing Amazon. Let's take a look at Amazon over here. Amazon. So goes up today 1.86% and it closed the trading session at $165.80. And in the case of Amazon, guys, another ugly looking chart. Take a look. A declining 5-day moving average, which implies that this stock is under the total control of sellers in minor time frames. We can say the same about major time frames because as of now, Amazon is trading below the 100 and the 200-day moving average. So, wow, the bulls have a lot of work to do here as well, guys. If we want to make some sort of positive case about Amazon, we can maybe state or say that the bulls were able to recapture today the 5-day moving average. But no more than that, guys. So let me see. Let me delete this trend line. So, guys, the next important spot over here is going to be the 200 DMA, the 200-day moving average. It comes in at $169. So this stock is a no touch, in my opinion, guys, until we see the bulls recapturing $169. This would be very positive, guys. This is a major time frame. This is a major moving average, a very important moving average, the 200 DMA. So yeah, bursting above $169 could be opening the doors for higher prices, guys. A no touch below $169 in the case of Amazon. This stock is very obviously guilty until proven innocent. Let me take a look at some anchor VWAPs and take a look at what I was telling you about Nvidia, guys. We're going to visualize the same phenomenon relative to Nvidia, overhead supply. So take a look at this anchor VWAP, guys, that comes from the all-time highs of Amazon. Amazon hit $200 back in July 8th. So the average market participant that started a position on Amazon when it hit its most recent all-time highs has an average price as of now of $180. I'm going to ask you again, guys. If you were holding the bag on Amazon, say that you started a position at $200 because you thought that Amazon was going to climb up to, $220. What would you do? Taking into account that as of now, Amazon is trading at $165 per share, and you are holding this massive bag, guys, at around $179. What would you do, guys, if Amazon hits $179, say, tomorrow, or maybe, next week? what would you do? Would you run the risk of Amazon hitting your average cost and then going back down once again? There you go, Wanda. Very good. Sell, of course. Most people would sell. This is an issue, guys. I'm telling you, any potential process of recovery of most of these stocks, the Googles of the world and the Amazons of the world and the Supermicros of the world and the CrowdStrikes of the world, needless to say, CrowdStrike, is going to be a tough one because we have a lot of people holding the bag. We have a lot of overhead supply over here. So in the case of Amazon, guys, if you ask me about a bullish trade over here, I would be interested, I guess, in starting a position on Amazon above $169. So I need to see buyers stepping in, and I need to see buyers recapturing an important technical level, such as the 200-day moving average. Let me see if the market structure of Amazon signals something positive. Let's see. Let's take a look at the demand and the supply of Amazon. And take a look, guys. Remember, the supply is represented on this chart through this blue shaded region, okay, that I am pointing out with my mouse. So the demand, buyers, okay, this blue shaded region, and the supply or sellers has to do with this purple shaded region that I am pointing out with my mouse. What do you see over here, guys? The demand is going down, the demand is decreasing, and the supply is rising. So this implies, in simple terms, that in minor time frames we have more sellers than buyers. And we can reconcile this market structure chart with the fact that we are seeing over here on this 4-hour chart a declining 5-day moving average. This is not a constructive chart by any stretch of the imagination. So, can we trade an ugly looking chart such as this one? Yes, we can. But first, we need, and to be honest with you guys, this is not my cup of tea. As you guys can tell, obviously, okay? I am not a trader of downtrends. I hate downtrends. But if you guys are going to trade an ugly-looking chart, such as the one of Amazon, you need to wait for buyers to show some sort of strength, like taking out, like bursting above the 200-day moving average. Okay, so Amazon, in other words, a no touch below $170. So let's keep going. Apple. Let's go over Apple. What do we have here? Let's see. Apple went up today 1.66% and it closed the trading session at $213.31. So this is a better looking chart, taking into account that Apple is trading above the 200 and the 100-day moving average. The 100 DMA is actually kind of rising, which is positive. But take a look at this green line, guys, over here that I am pointing out with my mouse. This is the 50-day moving average. Important spot. So the only trade to the upside that I could mention over here, and let me draw a line here, would be Apple consolidating above $215. So Apple consolidating above the, by the way, upward sloping 50-day moving average. Take a look at how this 50-day moving average happens to coincide with a previous resistance, in the case of Apple, back from late June and also back from early June. So Apple consolidates above $215, guys. I think that this could potentially open the door for a test of the 20-day moving average near $220. This would be bullish for Apple, okay? Bursting above $215 and being able to consolidate above that level. That would be the trade that I would be interested in the case of Apple. Let me see anchor VWAPs in the case of Apple. In the case of Apple, we see a bit less technical damage. Let's see. And take a look, guys. So, we have buyers trapped from all-time highs. Take a look at this anchor VWAP, this AVWAP, this anchor volume weighted average price. This anchored volume weighted average price line that comes from the all-time highs of Apple, which was hit back in July 15th So over here, we have buyers trapped at $219. So this is the only important level of overhead supply that we can point out in the case of Apple. So say, and take a look, guys. Actually, the 20-day moving average, the pink line that I am pointing out with my mouse, coincides with the anchored volume weighted average price line that comes from the all-time highs of Apple. So Apple burst above $220, and I think that the bulls are off to the races over here. And yes, a process of consolidation above $215 could open the door for a test of $220 approximately. So yeah, Apple, I think that out of all of these magnificent 7 stocks, Apple is the one that looks, that looks the better, to be honest with you guys. Let me take a look at the supply and the demand of Apple. What do we see over here? Apple, alrighty. Aurora Cannabis. I can go over Aurora Cannabis. William, sure. Disney as well. Okay, so the supply is rising. Remember, on top of this chart, you guys can see the demand or buyers, and at the bottom, the supply or sellers. So the demand is rising, which is good, but the level of the demand is a bit below relative to the level of the supply, and the supply is rising. So this is, we can make a case that over here we have a tie between buyers and sellers. Okay, we cannot make neither a bullish nor a bearish case from a market structure standpoint in the case of Apple. So Apple consolidates, guys, above $215. I am willing to give it a shot to the upside. Sure. Okay. How far out options do you buy for SPY? I buy extrinsic value, Vicente. I usually buy 1 month out, 1.5 months out. That helps me to avoid setting like extremely tight stops. Yeah. I never trade 0 DTE, if that's what you're asking about. Okay, never. That's gambling, guys. So, trading options is for the most part gambling. But if you trade 0 day to expiration options, you're like a super degenerate gambler. So I don't trade 0 DTE, as most of you guys do. Yeah. Okay, Tessie. What is going on in the case of Tessie? Let's see. Tesla, my Tesla, goes up today 3.69%, and it closed the trading session at $198.84. Not a good looking chart, guys. The bulls were able, take a look, guys, and we have been talking about the 100 DMA, the 100-day moving average. Take a look at this blue line. This is the 100-day moving average. And take a look at the spot at which the bulls of Tesla were able to find support a few days ago, like 4 trading sessions ago, and today as well. Take a look. This is an important moving average, guys. All of you should use the 100 DMA. All of you. And guys, I have always said that a trader should use the technical indicators that work the best for them, right? But I don't know, guys. I don't know why you don't use Anchor VWAPs, and I don't know why you don't use these very important moving averages, such as the 50, the 200, and the 100. And you guys use very weird moving averages. Sometimes I take a look at our Discord, and you guys use the 15 exponential moving average. Okay, any specific? That's not an exponential moving average. That's what you guys are getting wrong. And if you guys are trading the markets on a constant basis, you should know the difference between an EMA, a simple moving average, and a daily moving average. So in the case of the 100-day moving average, okay, the 100-day moving average, guys, basically shows you the average closing price of the last 100 days of any given stock. It is a very important moving average from an institutional standpoint. So I have seen that most of you guys use simple moving averages or SMAs. Okay, so in the case of a simple moving average, and this also applies for the most part for an exponential moving average, in the case of an SMA or a simple moving average, a simple moving average, let's say that simple moving averages show you the average closing price of a specific time frame. So take a look at this, guys. This is a 4-hour chart of Tesla. Check this out. Because in the case of daily moving averages, or day moving averages, let's say daily moving averages, okay? Or daily SMAs, because these moving averages are also called daily SMAs, or daily simple moving averages, okay? Take a look at the price that the 100 DMA is showing us in the case of Tesla. $190.91. Take a look, okay? This is on a 4-hour chart. If I pull up a 5-day, 5-minute chart, take a look at the price that the 100-day moving average is showing us. $190.50. It is the same price. So the daily moving averages, or the price that a daily moving average shows, doesn't change with the time frame. That's why these moving averages are so important, because we have a lot of market participants looking at the same prices, regardless of the time frame. You see what I'm saying? And in the case of exponential moving averages, it is basically the same relative to a simple moving average. But in the case of the exponential moving averages, let's say that the math that is being done in order to calculate an average closing price of any, based on any given time frame, makes more emphasis in the last 20 or 10 candles. So the exponential moving average is more reactive relative to the simple moving average. Okay, it is quicker than the SMA. Okay, I don't use neither SMAs nor exponential moving averages. If those moving averages are working for you guys, so that's fine. But you should be using these moving averages, daily moving averages. I don't know if any of you guys work with or use Thinkorswim, because the setup is very easy, guys. Let me show you. Edit status. You just need to pull up status and pick a daily SMA. You guys can see it over here. Daily SMA, daily simple moving average. For SPY also no 0 DTE. No, I don't do 0 DTE. Yeah. So when you hear, guys, about a 100-day moving average, a 200, a 50, or a 5-day moving average, you need to take into account that the prices that those moving averages show do not change with the time frame. That's why they are so important. Okay? And I mean the case of the SPY is take a look. This speaks for itself, guys. Look. This blue line, this is a 100-day moving average. The bulls weren't able to take out this level 2 days ago, yesterday as well, and they finally did it today. So for most of the market's participants, this moving average is important. That's why the SPY stopped right there yesterday, 2 days ago, yesterday and today as well. That's it. Well, let's circle back to Tesla, guys. TSLA. Let's see what is going on here. So, as I told you guys, this is not a good looking chart. Lower highs, lower lows, the perfect definition of a downtrend. We can make a case that, we can make a case that the fact that the bulls were able to hold the 100 DMA as support 4 trading sessions ago and today as well is kind of positive. But in the short term, take a look at the spot that is waiting for the bulls, guys, to the upside. The 200 and the 50-day moving average. $209. Can the bulls take out or burst above these moving averages easily? That might not be the case. And if we pull up here anchor VWAPs, or anchor volume weighted average price lines in the case of Tesla, let's take a look. TSLA. What do we see here? Take a look, guys. Let's talk about overhead supply. Take a look. We have buyers trapped all over the place, guys. Unbelievable. So, $199. So Tesla closed today at $200 pretty much, right? Okay, and let's see. Let me see. 207. No, yeah, $200. Okay, take a look, and I have showed you guys this Anchor VWAP on multiple occasions. So this AVWAP that I am pointing out with my mouse comes from 2020, or comes from the low that Tesla found support at, let's just put it that way, back in 2023. Take a look at this AVWAP, and this Anchor VWAP is signaling as of now $208. This is an important level, guys. We had a lot of people starting positions on Tesla back in January of 2023. And as of now, those market participants have an average price of $208 approximately. Big level of overhead supply for Tesla over there. Needless to say, guys, take a look at this other Anchor VWAP that comes from the highest level that Tesla reached back in 2023, because Tesla hit almost $300 back in July of last year. So these market participants have an average price as of now of $218. So we have a lot of overhead supply here, guys. And in the case of the Anchor VWAP that comes from the 2023 low, when Tesla hit like $100 in January of 2023. So this Anchor VWAP comes in at $208 approximately. So let me see. Yeah, take a look, guys. Say that Tesla tries to keep going higher. The bulls need to deal with the 200 DMA that comes in at $203, and then with the 50-day moving average that comes in at $209, and this 50-day moving average is pretty much coinciding with the Anchor VWAP that comes from the 2023 low. So in my opinion, for me, in order to turn a bit bullish from a technical standpoint, in the case of Tesla, I need to see it above $210. I would say that this is a no touch below $210 because we have a lot of overhead supply over here. Let me take a look at the market structure of Tesla. Let's see if we see something constructive from a demand and supply standpoint. Let's see. Let me take a sip of Sprite here. And take a look, guys. Nothing. There are no buyers anywhere. Look, take a look at the demand. Again, the blue shaded region that I have been telling you guys about. Take a look. The demand collapsed. There are no buyers over here, guys. And the supply is rising. So I'm thinking, guys, that any attempt to fill this gap up to $209 could be an opportunity in order to sell the rip. If the bulls take out $209, okay, perfect. Awesome. That's bullish. But I don't know. I don't see myself going long Tesla below $210 approximately. Anthony asked, I thought he said he didn't use EMAs. I don't use EMAs. I don't use them, guys. If you use EMAs and they work for you, that's awesome. Yeah, if they work out for you, that's awesome. I don't use them. Yeah. Okay. What other stock you want me to go over? I have to film a video once I'm done streaming for you guys. And keep in mind that I already streamed for 7 hours for the guys of my Patreon. So this is going to be a long day for me. 38 minutes in. That's good. Okay. Let's see. What other stock? Coinbase. Awesome. Let's go over Coinbase. Over here, Let's see. Coinbase Global. So in the case of Coinbase, guys, went up today 7%, and it closed the trading session at $192.32. I am seeing that Bitcoin is in positive territory as of now, a bit below $60,000. And this is not a good looking shot either, guys. Take a look. Lower highs, lower lows, until pretty much 2 trading sessions ago. And if we want to point out something positive over here, we can say that the bulls were able to recapture both the 200 and the 5-day moving average near $190. However, the 5 DMA is downward sloping, so this isn't positive for the bulls. I would like to see some sort of process of consolidation above $190 $192. And if I draw a line over here, guys, and you guys know that I am improvising, or that I do improvise every single time that I go live for you. So say that the bulls hold this 5-day moving average as support near $191. Well, that's positive. But I would have to be, I would like to see a bit more of confirmation, a bit more of technical strength by holding as support a previous level of support at $197. $197 is a previous support back from mid-May, and this is also a previous support back from early May as well. So yeah, the bulls hold here $197. This could be opening the door for a test of $209, which happens to be a previous support back from June and July as well. And by doing so, by being able to hold $197 as support, they are going to be trading above both the 5-day and the 200-day moving average, and the 5-day is going to start to rise little by little. So that would be also positive. So maybe I would think about going long Coinbase above $197, but there is a lot of technical damage over here, guys. So this stock is guilty until proven innocent. Let me take a look at an anchor VWAP from the most recent 52-week high of Coinbase. Take a look, guys. Take a look at this anchor VWAP, this anchored volume weighted average price line. This AVWAP comes from the most recent 52-week high of Coinbase at $282. So Coinbase hit $282 back in mid-March. And these market participants, as of now, have an average price of $231. And from the last earnings report of Coinbase, no, this is the second to last earnings report. So let me remove this anchor VWAP. Now, this is the most important level of overhead supply that we can point out in the case of Coinbase, near $230. So take a look, guys. And right at $230, we have the convergence of the 100 and the 20-day moving average. So there is a lot of technical damage over here. The bulls have a lot of work to do. And Coinbase isn't going to be out of the woods or completely out of the woods until and unless the bulls can burst above $230. So if you go long Coinbase, you have to be aware of the fact that the rip could be faded at any moment while Coinbase remains below $230 approximately. But yeah, a process of consolidation above $197 would be positive. Let me take a look at the market structure of good old Coinbase. Let's see, what do we see over here? Coinbase. Let's see. The demand collapsed, just like most of the stocks that we have gone over today. But the supply is starting to go down, so this is some sort of light at the end of the tunnel for the bulls, because this could be signaling some sort of seller's exhaustion, if you will. So yeah, maybe consolidation above $197 could open the door for higher prices in the case of Coinbase. So what else do we see over here, guys? We already went over Nvda. Well, I have a lot of requests. Let's see. What is the name of that supply versus demand website again? That is market structure. Let me move my camera, guys, so you can see the name. And my camera is like, I am an ugly dude, guys. My camera should be smaller, right? I don't want to scare away anyone. So this is the name of the site, guys, of the website. Market Structure Edge. You have to pay for the service, but you have a 30-day free trial. So you guys can give it a try if you want. Dell Technology. Okay. What did you say is the no-touch price for Nvda again? Let me circle back to Nvda. Let me see. Nvda. Nvda. I would say it is a no-touch below 105. Yeah. Consolidating above 105. Nvda can keep going higher and maybe make a test of $111. Yeah. It's not. It isn't a good-looking chart. Still guilty until proven innocent. So you have to be careful trading Nvda. Yeah, either a tight stop, or I don't know, maybe build up a position in increments. You guys asked about Dell. Okay, Dell Technologies. Okay, Dell didn't benefit from the earnings report of Supermicro that came out yesterday, but today we saw some sort of relief rally here, right? So Dell went up today 4% and it closed the trading session at $91.46. Again, guys, the perfect definition of a downtrend until yesterday. Lower highs, lower lows, a declining 5-day moving average, declining 20, declining 50-day moving average. So the bulls have a lot of work to do over here, guys, like a lot. So over here, because in the case of Amazon, in the case of Nvda, in the case of, I don't know, Nvda, those stocks were able to recapture today the 5-day moving average. In the case of Dell, that isn't the case, guys. So this stock is super guilty until proven innocent. If you guys want to go long Dell, taking into account that this is a major downtrend, you need to wait for buyers to show some sort of strength. What could be a signal of strength? Maybe the bulls being able to recapture the 5-day moving average, guys, that comes in at $95. So say that tomorrow, guys, you see SMH and Nvda going higher and AMD going higher. And we see another green day for most of the tech stocks out there and also the semiconductor stocks. If the bulls of Dell can consolidate above $95, this could maybe open the door for a test of $105. This red line, which is none other than the 200-day moving average. So from $96-ish up to $105. Again, the 200 DMA, this could represent a 7.70% profit trade. Nothing to sneeze at, actually, in the case of Dell. So yeah, this would be the this would be some sort of potential trade that we can take to the upside. But this is a very ugly looking chart, and we have a lot of buyers trapped all over the place. Let me take a look at some anchor VWAPs here. VWAPs. Let's see, Dell Technologies. Let me see. Dell Technologies, there it is. Take a look at this, guys. A disaster. An anchor VWAP that comes from all-time highs is signaling as of now $134. What do you guys think these market participants are going to do the second Dell hits $134? They are going to take their money and run away. 1,000,000% guaranteed. And if we take a look, let me display an anchor VWAP here, guys, from the last, so the last earnings report coincides with the all-time highs. I mean, yeah, what other anchor VWAP can we display over here, guys? So we have a previous high from April 4th at $134. Take a look, the same price, $134. We have a lot of back holders. This is back holder central, guys. So any process, any solid process, any potential, I would say, solid process of recovery in the case of Dell is going to be a painful one, guys. More likely than not, we have a lot of buyers trapped all over the place. So be careful trading these downtrending stocks, guys. That's what I always told you, right? And maybe there is a short-term trade here to the upside. Why not? But short-term trade. Do not fall in love with downtrends, guys, please. So Dell consolidates above $94. Yeah, maybe there is room up to $105. I would be fading the rip at $105, more likely than not. Not a good looking chart, by the way. As you guys can say, right? As you guys can see. Let me take a look at the market structure of Dell. Demand and supply, 5:45 p.m. on the East Coast. Take a look, guys. What a disaster. What a disaster. Buyers are literally nowhere to be found here, guys. Take a look at the demand. Again, this blue shaded region. There are no buyers whatsoever. They left. They are gone. And take a look at the supply, guys. The supply is rising. And way above the non-existent level of demand. So I think that unless, I don't know, guys, we see a semiconductors rally tomorrow, and I don't know, maybe the markets fall in love once again with the AI narrative, I think that we can short Dell near $105 approximately. Yeah, that's my opinion. Nvda 112 tomorrow. It can happen. We are seeing a lot of volatility. Yeah, recently. So Nvda could climb up to 112, no problem. Yeah, it's possible. Will the video of this live stream will be posted later? Yeah, I am going to. As of now, guys, I am streaming exclusively for you guys. Okay. But once I'm done streaming, I am going to be releasing the stream on my YouTube channel for everyone. Okay. It's going to be a public stream. As of now, it is a private stream for you guys. Disney. Oh my God. Another disaster, guys. Take a look. Today, Disney hit a brand new 52-week low. Lower highs, lower lows. There is zero, guys. Zero reason to try to catch a bottom in the case of Disney. This technical short is pure thrash. There's no reason. Do not try to guess a bottom over here, because you're very likely to be mistaken. And I think that Disney is approaching, guys, the COVID-19 low. This is extraordinary, huh? Unbelievable. Yeah, take a look, guys. So when the world was shut down and the theme parks of Disney were shut down and everyone was at home, not being able to do, anything fun, Disney went down to $80. Unbelievable. Wow. And we can make a case, guys, that if Disney, and it already did it, right? But this was back in 2020. This was back in 2023. So Disney found support, guys, back in October of last year, right at $80 approximately, which is a level that happens to coincide with the COVID-19 crash low. So I don't know. I guess that we might see buyers waiting for Disney at $80 again. If we happen to see $80. I mean, it is only $5 away from $80. Yeah, take a look. I think that Disney should be able to come across with buyers at around $80. Would I be a buyer down there? No. Hell no. No. But I guess that many of you guys would be interested in buying the dip at $80. Yeah, I mean, yeah. It is a very noticeable previous level of support, big time. So I guess that, buyers could show up over there, but I am not a trader of downtrends, guys. So I would wait for Disney to show first some sort of technical strength, some sort of relative strength, if you will, before pulling the plug over here. Like, I don't know, recapturing the 5-day moving average. Why not? $87. This is a very ugly looking chart, guys. Just forget about this stock. And if you ask me, I think that this level at around $80 is going to start to act like a magnet. So this could be a short, guys. Say that Disney tomorrow tries to burst above $87 and the bulls aren't able to recapture that level. I would be interested in getting some puts here. Oh, by the way, let me tell you. Is it here? Okay. I have an unusual put options alert for you guys. So put this down on a sticky note. Yesterday, someone, I don't know who that person or who did this, invested, a trader, an institution, I don't know what. Maybe this could be a hedge. You never know. So yesterday, someone invested $1.8 million in put options of Disney in the money. So check this out. The strike price is $100. And these puts expire on September 20th. So someone is putting a lot of money on the table, taking a gamble on the fact that we have lower prices coming for Disney. Again, guys, $1.8 million in puts, Disney puts, that expire on September 20th with a strike price of $100. Do you think that whoever put $1.8 million on the table against Disney is thinking that this stock is about to bottom out and go back up? Next, let me take a look at the market structure. I am not going to check on any anchor VWAPs here, guys, because we have 1 billion buyers trapped all over the place in the case of Disney. And take a look. The market structure is starting to look somehow hopeful here because the demand is rising. The supply is through the roof. Okay? So we can make a case that from a demand and supply standpoint, we have some sort of tie over here. So the demand is rising, guys. So I think Disney bounces back up at $80 if we see a retest of that previous level of support, in my opinion. Okay, so we are 56 minutes in. Any other request? Micro tragedy. I think that the stock split, MSTR. Yeah. So yeah, we have the but I don't. Yeah, the moving averages are all messed up, guys. So I am going to skip this one. Yeah, because of the stock split. Yeah. It went through today, right? Yeah, I cannot analyze any stock without my moving averages. I guess this is going to be updated in the upcoming trading sessions. Lilly, sure, I was taking a look at Lilly today myself. Guys, I swear to God, and the guys of my Patreon know this is true. I was about to, but 3 seconds away from buying Lilly calls today above $836. Take a look. I was 800. This was over here, guys. Take a look. I was expecting consolidation above $836, and if that were the case, I was thinking about upside potential for Lilly, and that's exactly what happened. But I didn't start the trade. I chicken out because the SPY was hovering around the 100-day moving average, and during the last 3 trading sessions, the SPY collapsed into the closing bells. I was like, I am going to skip this trade. And I ended up doing the wrong thing, right? So I went over the earnings report of Lilly today, guys. Unbelievable earnings report. This company is killing it. But killing it. Unbelievable, So we'll see what happens. I don't trade stocks based on earnings report. I trade stocks based on technicals. So we can still make a case here that Lilly failed today right at the 50-day moving average. So any process of consolidation above the 50-day moving average could be opening the door for more upside. Lilly went up today 9% and it closed the trading session at $845.31. So, yeah, guys, the bulls consolidate above $866. So the 50-day moving average, we have higher prices on deck in the case of Lilly. Let me take a look at an anchor VWAP from all-time highs in the case of Lilly. Let me see. Let me grab a bit of Sprite here, guys. Let's see. Lilly. Let's see. Take a look, guys. So the anchor VWAP that comes from the all-time highs of Lilly hit $960 back in July 15th. So this anchor VWAP comes in at $836. You guys can see. So the trade that I was thinking about today, that I just told you about, and that I didn't actually start, that I didn't open, unfortunately, was based on this anchor VWAP that comes from the all-time highs. I thought, like, okay, if the bulls consolidate above this VWAP, I think that we have higher prices coming up. That was the case, but I chicken out. I didn't start the trade. So say that tomorrow we see some sort of pullback down to this VWAP at around $836. And if we happen to confirm support over there, there is a potential bounce back up trade over there. And we didn't have a lot of overhead supply here, guys. Take a look. We didn't have many buyers trapped on the way up in case that Lilly, goes on a tear once again. So Lilly consolidates above 100. Sorry, 100. One day, I don't know, maybe they can carry out a stock split. Lilly consolidates above $868, guys. So this 50-day moving average, and this stock is off to the races. Super bullish. Let me take a look at the market structure of Eli Lilly. Let's see. Eli Lilly company. Well, take a look, guys. The supply is starting to go down. Remember, supply sellers. The supply is starting to go down and the demand is starting to rise. You guys see Lilly above 866, guys, and you can bet on the fact that I am grabbing calls of Lilly. More likely than not. Sure. Guys, I think that I am going to have to wrap it up. An hour, and I still need to film a video. So let me go over Google quickly. Let's see Google. Let's wrap it up with good old Google. Let's see. Google, okay, goes up today 1.94%, and it closed the trading session at $162.03. Well, the bulls didn't test the upward sloping 200-day moving average. They were about to, but they didn't do it. And they recaptured today the 5-day moving average. So, I mean, it isn't a good looking chart. The 5 days is still downward sloping. But I don't know, guys, maybe if the rally that we saw today in tech keeps going tomorrow, I don't know. Watch out for a process of consolidation above $161, so slightly above the 5-day moving average. This could open the door for a test, a potential test, that is, of the 100-day moving average near $168. So from $161 up to $168, this could represent a 5% profit trade. Not a good looking chart. You got to be careful. And what I have been telling you about overhead supply in most of the tech stocks applies obviously as well for Alphabet, guys. This is a downtrend. And we have a lot of buyers trapped all over the place. So there is a lot of technical damage over here. But maybe a short-term trade could be taken from $161 up to, as I just said, the 100-day moving average near $168. This could be a potential trade to the upside. In the case of Alphabet, if we take a look at the market structure, and I'm going to go over ACV quickly because I have a very strong request from William. Yeah. Take a look, guys. The demand equals zero. No buyers, guys. The supply is starting to go down little by little. So when we see like no demand, but the supply is starting to go down, this usually matches an ugly downtrend in which, let's say that, we are about to see some sort of seller's exhaustion process, okay? By the way, Bitcoin just exploded to the upside. I don't know if we had any news coming out. Wow, guys, take a look at this upstick on Bitcoin. Jesus Christ. I think that some news came out here, guys. So in the case of Google, yeah, the fact that the supply is starting to decrease might be signaling that, yeah, why not? Why not a test of the 100-day moving average at $168? Okay, ACB, Aurora Cannabis, right? Am I getting that one right? Yeah, Aurora Cannabis. Let's take a look. This is an uptrend, guys. Jesus. What are the markets thinking about, guys? That Kamala is going to be elected president? Why are they buying MJ stocks? This is very suspicious. So this is a very good looking chart, guys. Wow. Aurora Cannabis went up today 12% and it closed the trading session at $7. I don't know, guys. I mean, very good looking chart. This is an uptrend above all the moving averages. A brand new higher high here. So let me zoom in here on the 4-hour chart. Say that ACB, it's a very choppy chart. Let me see. Yeah, we have a previous resistance here, guys, at around $7. This is a previous resistance back from early May and also a previous resistance back from early April. So this is a technical chart that, unlike most of the technical charts that we have gone over throughout the stream, is under the total control of buyers. Very good looking chart, a process of consolidation of ACB above $7. And you guys are looking at $8 here. Yeah. Yeah. From $7 up to $8. Get this, guys. This would be a 13% profit trade. Very good looking chart in the case of Aurora Cannabis that is pointing out, or that is suggesting that more upside is on the table. Let me take a look at an anchor VWAP from the most recent 52-week high of Aurora Cannabis. Let's see. Well, it's been a long time, guys, since I last checked on Aurora Cannabis. And take a look, guys. Take a look at this, William. Take a look at this, bro. So if we display an anchor VWAP, an anchor volume weighted average price line from the most recent 52-week high of Aurora Cannabis, we get a price of $7. So that implies that we didn't have a lot of overhead supply here from, let's say, a 4-hour chart standpoint. If we take a look at major timeframes, we probably have buyers trapped at higher levels relative to the current price of Aurora Cannabis. But the fact that this stock is consolidating, or that could be potentially consolidating above the anchor VWAP that comes from the most recent 52-week high, and at the same time, maybe ACB could be consolidating above a previous level of resistance that now might be acting as a new support, is bullish. Above $7, I would give it a shot at Aurora Cannabis. And I guess that the market structure should be looking good, guys, because this is a very good looking chart. Usually, guys, the market structure charts match the technical chart of the stocks. Let's see if that is the case of Aurora Cannabis. Let's see. And take a look, guys. Demand above the level of the supply, and the supply is going down. I think that we have higher prices coming up for Aurora Cannabis. Guys, I got to wrap it up. I'm sorry. I have a lot of requests from you. I'm doing... I really have to run the extra mile in order to go live for you. So thank you very much. Thank you for watching. Thank you for listening. I guess that tomorrow we are still going to be seeing volatility in the markets. So I am going to be super active on Discord. And I will keep streaming for you guys at least once a week, okay? I didn't do it for the last 2 weeks, but I had to take a trip. And last week, I don't remember what happened, but I wasn't able to stream for you guys either. So I do apologize for that, but I am going to be streaming for you guys pretty much every single Thursday. So thank you very much. And I will see you guys on Discord. Take care. Thanks. Enjoy the rest of your day. Let's go Team USA. Let's get that gold medal. Take care, guys. Thank you. Bye-bye. Thanks.